Welcome, everyone, to this month's QB Talks. My name's Murph. I'll be your host for today. We have a packed show focusing on the 5 reasons beyond sales tax that you need Avalara in your tech stack. But before we get started with the content, we have some housekeeping to do. So we want to know, are you planning on attending Intuit Connect this October in Las Vegas? And you can help us out by answering these polls just as quickly as possible. This essentially is a yes, no. So I'm going to count it down. 5, 4, 3, 2, 1. And would you close the poll and show us the results real quick? The vast majority are not going. Okay.
Oh.
Wow, we want to hear why. Put it in the chat. Tell us why you're not going.
So put it in the Q&A because we're not going to use chat.
Thank
All
you.
right, so I'm confident that 99% of you know me, but for that 1/10%, my name's Bill Murphy. Everybody just calls me Murph. I've been around since dirt was first made, and I've been advising businesses about finance for nearly that long. 27 years ago, I became a pro advisor, and I've supported Intuit products ever since. While mostly retired, I do write about 7 or 8 articles and other content for Insightful Accountant every week, and I also administer the Top Advisor Awards, which everybody just calls the Top 100. Now let's talk about CPE. To earn CPE for today's webinar, you must attend a minimum of 50 minutes and answer at least 3 CPE polling questions. If you earn CPE, we will notify you within 24 hours, and you'll also be given the links to download today's presentation PDF and also a link to where the recorded webinar can be found. We will be using only the question and answer window today. The chat has been turned off. Now we want to know if you want CPE credit for today's webinar, or perhaps the alternative of certified hours in lieu of formal CPE. And it shouldn't take you all that long to answer this poll. So if you would, let's close the poll in 5, 4, 3, 2, 1. Did we even get that poll open, Matt?
We don't have that poll.
I didn't see it.
I sent it to you.
That what?
That poll, I had sent it to you. Okay, let's go on. Gary also tells me that I've got to plug Be Insightful, our premium content channel. We offer 9 training tracks, including tech stack, app comparisons, migrations, HR, marketing, business development, and others, led by top trainers in the profession. Members have access to more than CPE credits per year, workshops, and a variety of premium content year-round. For example, I just published a white paper last month on migrating from QuickBooks Desktop to Sage 50. And I'm super excited to announce that next July, we are hosting a 7-night Caribbean working cruise, during which you'll have time to work on your business in sessions that are curated and led in such a way you'll walk away with a strategy and execution plan to grow your business to the next level, but also be sufficiently relaxed so to give you the energy you need to do that. Now, if you'd like more information about the opportunity to cruise with me and learn a lot and enjoy gourmet meals and get in some recreation and relaxation in the Caribbean sun, then just answer yes to the poll that Matt is opening about Be Insightful and our cruise.
So I haven't been on a cruise in a long time, and I don't know why I wouldn't go on this.
Let's
Matt,
go, John. I'm taking
Ah,
down the information. We're
but say
going.
I just wrote down the info. I've never
Matt,
even
have
heard
you
of this.
got that poll?
Yes.
Okay, I'm just not seeing it. All right. Let's go ahead and close that poll. We don't need to look at the results. And so here are the 3 learning objectives for today. And I'm not going to take time to read these. I've already spent longer than I intended. So I know it'll be covered as part of the presentation Avalara is going to do. And speaking of Avalara, with me today are John Sallese, Avalara's Director of Strategic Accountant Solutions and Partnerships, and Roger Ingalsbe, a Senior Implementation Engineer with Avalara. And they're going to discuss a variety of features and functions and issues relative to Avalara's solutions. And with us also is Jamee Dunn, Avalara's Senior Strategic Alliance Manager for Business Development. And she can answer questions about partnership opportunities for pro advisors, bookkeepers, and accountants. And I know one of the things she's going to mention is this morning, got a new email about a new program they're offering. And so I know they're going to discuss that with us. And so I'm just going to turn it over, and Jamie, I'll let you start, and y'all can just proceed on. I'm going to stop sharing and let you share.
All right. Thank you, Murph. Thank you, insightful accountant. I would say that Roger, John, and I are kind of your QuickBooks freaks at Avalara. We are 100% in on supporting the Pro Advisor Bookkeeper and QuickBooks channel here. So we're going to talk today about Avalara and your tech stack. We're going to talk about why you need Avalara, 5 reasons why you need Avalara, and then we're going to have some Q&A.
Great.
I'm Jamie. Murph already introduced me. John Sallese, Director of Partner Solutions. Roger Ingalsbe, our Senior Implementation Engineer. We would actually probably die if Roger did not work at Avalara. Okay, polling question number 1. What is the most time-consuming part of managing sales tax in QuickBooks today?
Oh, we already got it popped up there. Okay.
States, managing exemption certificates, ensuring taxes calculated correctly, preparing and filing returns, and not sure. I don't handle sales tax directly at all. And this can be in desktop or online or IES, guys. We work in all of those.
I'm always interested to hear what they have to say here.
What are the results?
All right, let's see the results, Matt.
Wow.
Track,
John, you go ahead and read those.
tracking rates, ensuring taxes calculated here. Okay, awesome. Well, we're going to spend a lot of time on ensuring taxes are calculated correctly here. Okay.
Great. So
Yeah.
are you sharing your presentation yet? I'm not seeing it.
Yep,
Okay.
it's up. So
All
right here,
Great.
this is what Murph alluded to in the intro. We have a partner referral incentive that's going from July 1st to the end of September. And what we're doing is encouraging those of you who replied in the poll that don't know, like, I don't know, I actually don't know. And that's why Avalara exists. So what we're saying is take a look at your customer list. Say, you know, I've got these 30 customers. I'm going to pick one that I think might be complicated. I'm going to pick one that I think is super easy, like it's a popcorn machine stand. And then I'm going to pick one that's just like, I don't even know. And you're going to get on the phone with one of our sales experts and have a free consultation between you and the end user just to talk about that. And by doing that, you will earn $250 cash for 2 referrals or 4 for $500 cash in 1 month. So again, we're just encouraging you to say, I'm going to look at my customer list and say, you know, I really don't know how these work. Can I talk to John or Roger or Jamie to understand more deeply and earn what I call travel money?
So if somebody refers 4 new clients that are eligible in the month of August and 4 in September, then they're going to make $1,000.
I wish
Oh,
somebody was
wow.
offering me $1,000. I tell you,
Oh, I
That's
never looked at
great.
it that way.
yeah. I once actually many years ago had an incentive like this going for a year, and I bought this guy with the money he earned a 3D printer. I'm not kidding you.
Oh.
So please take advantage of it.
Awesome.
Next slide.
Well, hey, Jamie, thank you. Before I go into the 5 reasons we were just talking about earlier about why customers typically use Avalara, I just wanted to talk a little bit about, I'm sure a lot of you on the phone already know or have heard of Avalara at this point, but Avalara was created to alleviate the burden of compliance that we're going to talk about today. And when you think of compliance, don't think of it just as calculating taxes. There's actually a lot of other parts associated with compliance. And we're going to talk about how we can hit those different areas, including the tax calculation piece with QuickBooks, and how we can make that a little easier for you. Having said all that, Avalara has actually been doing this for quite some time. We started doing tax calculations back in 2004, and we actually have nearly 50 billion calculations that we did last year. So that's a lot of people looking to calculate taxes with us. But just as I'm sure you all know, we haven't just started in the industry. Having said all that, why are we here today? Why is tax compliance challenging? This comes up quite a bit because a lot of people think of, and I'm going to be saying this quite a bit, a lot of people think of tax compliance as the line item that shows sales tax on the invoice, right? That physical line that pops up and shows the tax amount. There's a lot that needs to occur before and after that amount shows up on the invoice. And these are just some of the things here: keeping track of exemption certificates, all the tax rules associated with calculating taxes. If you're selling something in one state, no problem, right? You probably know the rules in your own state, or maybe you don't and you have to look it up, but like it's just one state you got to worry about. But once you start magnifying out that to other states, you can totally do that manually if you want to. But there comes to a point in life where you're like, I don't want to spend all my energy and time figuring out how to tax a candy bar in 50 states, right? What's an easier way to do that? How do I register to start calculating taxes in those other states? How do I know when I need to register? How am I tracking any of those exemption documents that I'm getting from customers that don't want me charging them tax? Like, what do you do with that stuff? And that's some of the conversation we're going to have today. Hopefully make it sound fun. But I took those items that we just showed, and I'm breaking it down into what I consider the 5 most important steps in managing tax compliance. And it's all not just calculating taxes. You'll see in the middle, point 3, calculating sales tax, calculating the correct sales tax amount when you're supposed to calculate it is the middle. It is very important. But before you get there, before you even calculating taxes, you need to understand when your business needs to actually collect and remit. We always used to call that nexus. Like, when do you have nexus in the state? When do you actually have to start charging taxes? And then when you actually figure that out, well, now that you know that you need to start calculating taxes, great. How do you actually do that? What's the correct way to do that? Well, the correct way to do that is to register in the state to collect and remit taxes, which is step 2. A lot of people get hung up on that. It's actually pretty easy to do. There's actually a workflow we can put around it to make it easy for you, but it's one of those things that you need to think through before you actually do it. 3, calculating taxes. We're going to show you how we calculate taxes with QuickBooks here. Coming up shortly, actually, Roger's going to show that to us. And then we're going to track some of the exceptions when you're calculating taxes. And one of those exceptions is step 4. How are you tracking and managing those exempt sales and the importance of that? We're actually going to talk about that a little bit in a little bit here. And then last but not least, remitting taxes. Just because that tax amount shows up on the invoice, they have to have a way to get that tax amount to the state at the right time based on the exact method they want you to pay them. We're going to talk about how we can make sure you can file and make that easy as well.
Hey,
But
John, real
before-
quick,
Yep.
Hey, folks, don't forget to put questions in the Q&A. But I am seeing a lot of messages right now that the polls weren't showing up and people need to know that they will get the CPE credit. So Murph, if we need to redo the polls at the end, we might have to do that. Just want to let everybody know that I am reading your questions and we will address that.
Hey,
Yeah,
good to
thus
hear.
far, only the poll that you all gave, your poll one, was considered a CPE poll. The others were not really considered CPE eligible polls. So, but don't worry about it,
We're good.
folks. As long as you're here for 50, and let's say you've gotten at least a couple of the polls, you should be fine.
Thank
Hey, no worries. Speaking of which, we've got a polling question up in front of us right now, and it looks like it's all queued up and ready to answer. But polling question number 2, how are you currently handling tax compliance in your organization or your clients? And we got some options there. You know, manual is always a popular one. Again, you can always do things manually, but like when does it get to a point when it's actually too much, it's taking too much time, there's no value add associated with it? And this is what we're kind of stepping through right now between the mix, fully automated, that kind of thing. I think we're good if we want to close the polls. See what we got here. And I'm assuming everyone can see it, but a tip mix. So a lot of people have a mix. I've noticed a lot of companies, they'll actually use us for like automating the tax calculation, but they're not necessarily using us for compliance or document management, which that typically doesn't become a problem until audits show up. Okay, well, let's get into it. Let's talk about the 5 steps of managing sales tax compliance with QuickBooks. And again, the process is before and after that. And we're going to go into reason 1, understanding where to remit. Now, when I've talked about this before, I talked about it as nexus creating activities. So before you even need to register, you need to understand if you even need to register in the state. And when you need to register in the state, or the process of figuring out if you need to register in the state, I should say, is do you have what we call nexus creating activities in that state? And there's lots of reasons you need to register, and a lot of that's changed over the years. I've been doing this for 30 years. Like, a lot of it's changed over the years. And we got a whole bunch of items listed here. We're going to get into it a little bit more about the different reasons, but like, locations was the old-fashioned way to think about nexus. If you physically are located in the state, congratulations. If you physically are there or have employees there, then that means you actually are required to register and file and collect taxes on behalf of the state.
And do you know, you guys, that if your client doesn't do that, it's actually like stealing from the state? Like it's like a real deal. Like, you are actually, if you do not remit back to the state, you are stealing from the state. It's crazy.
You know, a lot of times, having worked with customers for a really long time, Jamie, that comes up quite a bit. There's do you need to register, right? And then, well, what happens if you actually start calculating taxes and you're not registered, and then you're not paying the taxes to the state? Like, what happens? Like, and that's when it becomes what they call fraud, right? Which can become a bit of a challenge.
And
So
so
this is where
that old premise of everybody thinking that it meant that you had a shop, or you had a warehouse or something like that, and then you had to meet an economic amount, is not true. That you're saying that if we've got employees, even if they're like a traveling salesman, but they're based in that state, that creates nexus.
you got it. That is the way a lot of states figure that out, is if you have payroll withholding in a state and you're not registered for sales and use taxes, that's usually a trigger. They usually send a nexus, it's called a nexus questionnaire, but they'll send a nexus questionnaire to you. States that have both income, that only really happens in states with both income and sales and use taxes, like a lot of the New England states have that. But it's definitely a thing. Physical nexus, which is the first one there, talks about like when you're physically located in the state, and a lot of people think of it as an office. but being physically located in the states, having an employee there. And
You
what
know,
happened? Oh,
I'm
go ahead.
old enough. I'm old enough to remember the Fuller Brush man coming to my house, and he used to like travel through 8 or 10 states. Wow.
I'm about to say a lot of the original cases that were out there, again, let's date ourselves here, but a lot of the cases that were traveling salesmen. It was Wrangler was one. There were a lot of people that used to sell educational programs door to door, like they'd physically have representatives in the state doing it. Yeah, it caused a lot of nexus. And a lot of states defined it in terms of how often or how physically you are in the state. And it was actually really confusing. Like, I mean, I used to just do that full time for a while. I used to work for accounting firms. That's all I did. And then back in 2017, Wayfarer passed, which was a court case that the Supreme Court decided on. And what they decided was, you know what? Physically being in the state, it's old fashioned, right? Economic nexus was like, well, how much money am I making in the state? I'm going to use that to figure out if I need to register in the state or not. And it's funny, states are usually pretty slow to pass any legislation. But like when the Supreme Court decided that within like a 2-year window, all the states had passed economic nexus rules that defined how much of an economic presence you had in the state to figure out if you need to register and file there. And it was easier, like from a business point of view, it made it a lot easier, right? If you had a certain dollar volume of business in the state, which this is just a quick little graph to kind of show it, but depending on what your dollar volume you had in the state, some states were 50,000, others were 250,000 of business in a state, like stuff you're shipping into the state. That was when you were hitting your thresholds and you needed to think about filing and registering in the state. And all the states had different ways they were measuring this. Well, some of them were saying 100,000. Some of them were basing it on the number of transactions in the state, but they all had different methods to sort of evaluate that process. And again, I'm old too, right? And I remember when we were all sitting in a circle when actually the Wayfarer case was being decided, and none of us thought it would pass. It passed, and all of a sudden, everyone went from, we're not sure if we need to automate our tax compliance, to a slew of companies having to register because they just couldn't keep up with the different rates they needed to have in all the states in order to be able to do it. It was a wild time, 2018 and 2019. So we were just chatting through, we were just talking about, well, when do I need to acknowledge and think about starting to register in a state? And a lot of times, as we were mentioning, it's how much business you had in the state, or if you're physically located in the state. And what I didn't say on physically located is being physically in the state could be employees, which happened a lot with COVID, right? A lot of employees started working remote full time. So a lot of smaller companies had a presence expanding out now, right? It also happens when you have affiliates. Sales reps, as we were mentioning earlier, are one of the biggest ones, right? If you have sales reps that work for the company or sales reps that represent the company, they were causing nexus in all the states and requiring you to register, file, and pay. Which brings us to the next point here. Gosh, I need to register, now what? Registering with the state, I'm going to make it sound super simple. Usually you log on to a website, you fill out some information, and they say, congratulations, here's your registration number. You now can file and pay on our behalf. What it actually is, though, is you're basically telling the state who you are so that they know who to hold accountable for collecting that, because you're acting on behalf of the state when you calculate and file taxes, right? So the registration process is the act of who's responsible for charging it and who's responsible for paying it. And it's funny, a lot of people get scared when they fill those out because they're asking for officer names when you do it, because they want to know who to hold accountable and who's getting audited if something's done wrong. So you don't usually want to take this lightly. When you register, you want to make sure you have the processes in place to calculate, file, and pay taxes before you begin this step. And if there's one area I spend a lot of time consulting with businesses on, it's right here. It's like, are you set up to file and pay taxes when you start registering? And that's one of the things Roger is going to show you in the next couple of slides here, is how easy it is to hook up Avalara to QuickBooks in order to get QuickBooks calculating and filing taxes correctly. Now the fun part, Jamie, that's when you, and Roger, that's when you all throw your fists up and say, yes, I am looking forward to knowing how to calculate taxes, correct?
Yes, I want to.
Mm-hmm.
It's
Okay.
so hard.
When I talk about taxes, and again, everyone thinks of it as the line item on the invoice. And by the way, I'm going to show a line item on an invoice here in a second that shows sales taxes on it. But in order to get that tax amount on the invoice, a couple of things need to happen. And I usually talk about it in terms of a website. So you're on a website, you're buying something. What's the first thing the company that well, first you got to figure out what you want to buy, right? But once you know what you're buying, the next thing you always get asked is, well, what's the address I'm shipping to? And that is the first thing Avalara needs in order to get taxes right, is we need to know the address. In fact, we'll actually even validate that address for you. QuickBooks has an address validator in there. If you use us for any of our online systems we have through, I mean, you name the online system, we probably integrate to it. But a lot of people use like Shopify. We validate our address with Shopify. We just make sure it's a good address you can ship to. But we're actually doing it so we can assign the correct tax jurisdictions to the calculation. Once we know we have the right address, Avalara is always looking at the ship from and the ship to address. We always want to know the warehouse where the product is and the location that we're shipping to. That's very important to figure out what we call the sourcing rules are for the transaction. Avalara is trying to figure out if it's an intra or an inter-state shipment. Those are the two main things we look at. Usually inter-state shipments, so going outside of the state, is usually always taxed at the destination it's shipping to. Intra transactions or shipments from within inside of the state, there's 8 or 9 states there that have special logic on how to handle that. And that's part of our calculation when we're actually calculating taxes. California is shown on the picture here. They're the ones that have one of the unique rules. If you're shipping the product within inside of the state of California, we actually pull tax rates from the ship from and the ship to address in order to calculate correctly. But once we know all that fun stuff, the next thing we do is we assign jurisdictions. Now, in this example, I'm shipping from California to North, I almost said Virginia, but to North Carolina. So I'm shipping to North Carolina. I'm assigning my jurisdictions. I'm figuring out what tax rates need to be. But before I go any further, the next thing I'm going to do is I want to check the exemption status. If you're using Avalara to maintain exemption certificates, which I'm going to talk about a little bit more in a second here, if you're using Avalara to keep track of those exemption certificates, those come into play here. Even though you're registered in the state to calculate taxes, you might not necessarily need to calculate taxes, because if the customer gave you a resale or an exemption certificate, we want to take that into account when we're doing it. The next thing we look at is the product. Is the product taxable in the state or not? A lot of times, tangible property is usually taxable unless specifically exempted. And then if you're selling services online, it's usually the exact reverse. Services are usually exempt unless they're specifically said that they're taxable. We look at that. We do a quick check to see if there are any tax holidays in there. Those are relatively new thing. A lot of states have special holidays for back to school or hurricanes where they're like, hey, we're going to give you a little bit of a break, try to get some local business going in the state, and we're going to give you some tax relief, and we're not going to charge taxes during a certain period of time. We have to keep track of all that for you. Now I have all the information. I'm going to apply those rules and regulations. A lot of the times when we talk about product taxability, we talk about candy. Candy has a lot of unique rules in different states. The politics behind that is like if an item is considered food, they tend to be less taxable. If it's considered candy or a luxury item, I know people think candy is a luxury item, but if it's more of a luxury item, then it tends to be more taxable.
Would
We look
that
at that.
be like fancy chocolates, like expensive chocolates that have caviar or something in them, or?
No, actually, we're only looking if it has flour or not in it.
Oh,
So if it has flour in it, it tends to be treated as candy. And if it has, I'm sorry, I hope I said that right. If it has flour in it, we tend to treat it as food. If it doesn't have flour, we tend to treat it as candy. That's like the little rule they came up with. A couple of states came up with that rule a while
so
ago.
like nougat would be different.
Yeah,
I,
nougat's all sugar.
I think here in Oklahoma, they're getting ready to, uh, we just exempted groceries, but they're trying to define now sugar content as
Yeah.
being whether or not something's going to be taxable or not.
You know, back in it was like 98 or something like that, they were trying to form. I remember sitting through an entire presentation on Coke and Pepsi were there, and we were trying to figure out what the exact percentage of sugar in something needed to be before it was like a whole day on it. But let's just say a lot of energy goes into it.
And of course, I think we have a public official who wants to define sugar as really what he's trying to get rid of is corn syrup versus raw sugar. So uh, that may sooner or later come into play.
Yeah. You know, um, I'm still hung up on that too. Like a lot of people are trying to define the type of sugar. And there's a couple of states that have imposed what's called a sugar tax, which is outside of this altogether. But like if you buy like soda fountain drinks and stuff that have a sugar content in it, they actually have a tax on top of the sales tax they want to charge to try to discourage you from like ordering basically stuff with sugar in it as opposed to like a unsweetened iced tea or something. But the end product of this whole conversation here is these are the steps we go through to calculate taxes. And then at the end, we want to send some tax to you, right? And if any of you are familiar with QuickBooks, I'm going to show you in this screen right here. All this energy goes into showing that tax line on the invoice in QuickBooks or the website or like whatever system you're in, even in Sage 50, we put it in there too. Whatever it's in there, that's how we actually put it in the system. Now, what I'd like to do is I want to show you a quick video on how to actually get, and Roger actually was on the call here, did this video for us, but how do we actually get that tax on the invoice with QuickBooks? And to just show you, and we're just going to do a quick little video here.
Welcome to this short presentation on why Avalara belongs in your tech stack, and once it's in your tech stack, how easy it is to connect AvaTax, our tax service, to your QuickBooks Online account. I will start in your my QuickBooks account, and to connect it, we simply go to Apps, and we'll go here. We will find Apps. Once we're searching, we'll search for Avalara, select it, and now we will click Learn More. This begins the connection process. Takes me into my Avalara account, where I can then start the process. This will take me to a company selection page. If I had multiple company files in QuickBooks, I could choose which company to choose from. In this case, I only have one, so I'm going to connect to my existing QuickBooks account. We are officially connected, and AvaTax is now available to calculate inside QuickBooks. We'll go ahead and from this page, we'll go back to QuickBooks, and I'll demonstrate what a tax calculation looks like. I'll go ahead and create a new invoice. I will select a customer. Find one that I happen to know is in Washington State. And I'm going to sell a product that I have already mapped to an Avalara tax category. And the category has rules behind it that knows whether a product should be taxed at 100%, partially, or not at all in any given state. Many states treat items different based on the taxability of that state's rules. I'm going to choose a SaaS product that is widely variable tax depending on the state it goes to. So in Washington State, I happen to know that SaaS products are fully taxable. So I will go ahead and now call for a tax result by simply saving it with AvaTax integrated. Anytime you save, it's going to call out and will calculate based on where you're selling to, who's the customer, and what are you selling. So click Save and Close. I will trigger a call out. The invoice is now saved. I'll reopen it to see that tax result that's been added to it. And if we scroll down, we'll see a line item has been added showing that this item was fully taxed at this location in Washington State. The tax rate at this address is 10.355%. If I switch customers and go to a different destination without changing any items and simply go to a California destination, SaaS is not taxable at all in California. So I'm going to choose a customer in California. And all I have to do to recalculate that is save it again, and it will update that tax line based on the taxability of that product in California. So I'll reopen it and see the freshly updated tax. And we see that it is now no tax because that product is connected to a tax rule in Avalara that says if it's California, it's not taxable. There are even states that have partial taxability on that. For example, in Texas, it's only 80% taxable. So if I choose a Texas customer and update the tax item, we'll see that the tax is coming in, again, based on that tax rule that we've created in your Avalara account. So we'll reopen it, see the updated tax amount on it. We can now check and see what the updated results are based on a Texas address. And we'll see that only 80% of the amount was taxed at the 8.25% that is applicable at this location. So I mentioned that we have connected items to Avalara tax codes. That process is called mapping. And we have utilities that will import all your items into your Avalara account, where we can then assign specific tax codes based on several search parameters and assistance tools that we've got available for you. Other elements that enter into taxability are, first of all, what state is it? If the state is not a taxable state for you, you don't have it turned on in Avalara, we can still mark it as taxable here. The product is taxable, but for example, I'm not charging tax in New Mexico currently. I'll switch to a New Mexico customer. And these folks are in New Mexico. And I'll save and update. Refresh the page. See an updated tax amount. And even though the product is fully taxable in New Mexico, because I'm not registered to collect tax there, I get no tax. Other elements are if your customer happens to be exempt for any reason, Avalara has an exemption management system that allows you to place certificates on file that will control whether a customer is taxable or not, or even partially exempt, as well as once those transactions are recorded in Avalara, we can use them for returns, as well as for states that are not taxable for you currently, like this one we just did for New Mexico. It will be accumulated toward an economic nexus threshold for New Mexico. So once you pass that state's threshold in sales, you'll be alerted that it's time to register in a new state. That concludes this short presentation on how easy it is to connect AvaTax to QuickBooks Online and get accurate tax results.
Hey, thank you, Roger.
Welcome to the
So in the last like 30 seconds of that, it answered two of my questions that I'd been wondering about. And that was that if you weren't registered in a state, would it alert you that you needed to register? And he said that it accumulated the amount in a liability account for Nexus and then alerted you when it was time. So
Yeah, we have a Nexus map inside of the system that kind of, because technically it's not an error if you don't calculate taxes, because like in theory, you know, we're doing it as configured, but we do track the sales in the system to kind of accumulate when they, and then we have a little map that we use that we change colors on to let you know when you're approaching thresholds, and then of course help you register when you need to start thinking about registering.
and with regard to exemption, it said that you'll hold the certificates and I guess track the expiration date of those certificates to alert as to they need to get a new certificate for their client or they're going to have tax withheld.
Correct. Yeah, that's part of our process. Is we certainly have a document management system. I'm going to go into that a little bit here in a second, and we'll actually talk about how we manage the expiration dates on them and how you can track the documents, mostly for audits. When you get audited, you can be able to reproduce those to give them to an auditor.
Okay.
No worries. Can everyone see the slide? Product taxability challenges.
Yes, sir.
Hey, no worries. So Roger was hitting an interesting area, which is SaaS services, right? SaaS has been one of those areas I've been involved with since it began when the whole concept of hosting servers came up. And it's changed a lot over the years, and it's still continuing to change. It's really moved away from physical computers, and it's more like going into what we call cloud services now. But you would be surprised though on the tangible tangible products point of view, which is what I'm showing here. It still comes up as an issue. And when you're looking at these items, you always got to take it into account. You know, if a state's deeming something to be a luxury item or for individual consumption, they tend to want to tax it. If it's more of a staple or a necessity, they're tending to make it tax exempt. And each state defines what a necessity is differently. And that's why sugar is like one of the areas that it always comes up. Because like sugary soda is like, that's really not a necessity, right? Like it's water, but it's water with a lot of sugar. Like, should we be exempting that or taxing it? And like, if you look at water here, bottled water in Connecticut, if you buy that same bottle at a convenience store, individual consumption, right? as opposed to a grocery store, it taxes it differently. And then you have to actually go into the definition of what Connecticut considers to be a convenience store versus a non-convenience store. It's actually rather interesting. But if you look at toothbrushes and dental floss, New York apparently taxes it as tangible property. Pennsylvania says, we're going to treat it as a necessity. Everyone should brush and floss their teeth. So we're going to make it exempt. Drink mixes always come up in the mix. You know, Kool-Aid's generally taxed more because it's considered more of a sugary item, even though you add your sugar usually to Kool-Aid, if anyone's made Kool-Aid, as opposed to Tang, which has like a vitamin C component, so people consider it more healthy, even though the sugar content's probably the same. I love the ice cream rule. In Maryland, apparently, if you're buying ice cream in sizes less than 16 ounces, it's considered taxable because it's for individual consumption. But if I knew I was going to save the money on the taxes, I would probably just buy the 16-ounce size and just, you know, basically eat more ice cream. That's me. And candy bars, we kind of talked about that. Anytime flour is in something, it's usually, or it tends to be treated more like a food item, exempt. And if it has no flour in it, it tends to be treated more like candy. Candy bars, it's easy. You'd be surprised, like a lot of the really sugary candy bars, like Mars bars comes up a lot. They don't have any flour in it. Twizzlers come up a lot because Twizzlers have flour on the outside of them to prevent them from sticking. And so they tend to be more exempt, even though there's a huge sugar content in there. But it's just a
John,
hard pass rule. Go ahead.
do people really get in trouble for not knowing that a Twix versus a Mars bar would be taxed differently? Like, is that, I mean, it sounds sensationalistic to me.
So, you know, this is non-rehearsed, but I got to tell you, my first large retail audit was with it was actually I'm going to try to keep the names out of this. It was with a gym chain. So it was a gym. They sold sports drinks, which hit the line between sugar. They sold energy bars, power bars, and I literally had to have, I was working for a firm at the time, I was managing their audit. I literally had to have the company deliver all of the bars to me so I could read the ingredients. And the reason why it's so important is if you're not taxing something right, you got to remember, an audit's like a 3 to 5 year period of time. So if you're not doing something right and you're doing it consistently wrong, basically,
Right.
there's a lot of money involved, right? So
Really?
like one item can mean quite a bit, like thousands and thousands of dollars, depending on how you swing it. So yeah, it does matter.
So what
And
about when, let's say they've been doing it poorly for a number of years and are fixing it going forward, but let's say they did it wrong for 4 years in a row and now they want to fix it. What are they exposed to then?
you know, if they're caught, you have to get caught. But if they're caught, usually they're going to get assessed the tax amount, and then they usually get assessed penalty and interest for not taxing it. So if let's just say you had $1,000 worth of sales, let's make it easier, $100 worth of sales, you know, and you weren't taxing it correctly, and you should have charged, you know, 8%, we'll say, so you had $8 you didn't charge. They're going to charge you the $8 in tax, and they're going to look at how long you didn't charge that, and they're going to charge you penalty and interest on top of that, which can range anywhere between 15 and 25% of that amount. And if you look at, like, you know, again, 3 to 5 years worth of time, it gets rather expensive.
I wonder the opposite. I wonder how many actual consumers would know that their Kit Kat shouldn't be taxed versus their Reese's cups. And so, you know, the store is just charging sales tax on all that kind of candy, even though they're not remitting all that sales tax to the taxing agency because they know that they don't have to pay it.
Yeah, you're thinking they might be saving the money. That is it is fraud. If you'll notice the reason why you have to, in the US, the reason why you have to break the tax out separately on an invoice is you have to show that you're charging tax separately, because again, technically you're doing that on behalf of the state. So you're showing it on the invoice, and like if you're showing it on the invoice, that represents the state amount. So like by law, you have to pay that to the state. But to go into your question a little bit more, Murph, is if you are charging taxes and like the item's not taxable, and you're doing it pretty consistently and wrong, that's actually bad too. Because that's a lot of larger companies get hit with class action lawsuits because of that. It's a situation where they shouldn't have been charging tax, but they were. And so like people will take them to court just based on that. So it can become a problem both ways. Good question, though. I haven't had that question in a while. And I'm noticing the time. And I lost my mouse. There we go. So we were talking about calculating, which was step 3. We're going to go through step 4 and 5 rather quickly here. But step 4, understanding tax exempt sales. We just spent all this time talking about, do I need to register? Okay, now I've registered. Now that you're registered, right, you're supposed to charge taxes, step 3 that we just talked about. You're supposed to charge taxes on everything and anything you ship into that state, unless one of 2 things happens, right? Unless one, the product is statutorily taxable or exempt, which we were just talking about with, like, for example, candy, or the customer is a tax exempt customer, right? Now, you just can't willy-nilly not charge a customer tax because they say they're exempt. You have to have proof that you're selling to an exempt entity of some kind, or for an exempt reason of some kind. And that's why we have the magic pieces of paper we call exemption certificates. And that's what I'm just going to briefly talk about them. But those are those magic pieces of paper customers give you and say, hey, don't charge me taxes. I'm exempt. And what's the common scenario, Jamie or Murph, that comes up for exemption? It is, you're going to say resale?
They don't care about it?
No. They're going to say resale, right? A lot of times they give you
Right.
resale certificates because they're like reselling the product. We don't get charged tax. Another common example, which is the first one here, is, hey, buyers have a certain status, and not-for-profits or government entities are one of them. A lot of governments don't want to pay taxes, except in Washington State here. They have funny rules around that. But most governments will issue a statement saying, don't charge me tax. I'm a government. I'm not paying it, kind of thing.
Around here, it's farmers and ranchers.
Oh, good example. In fact, I didn't even bring that up. On here, like agriculture, manufacturing, they're either exempt or they have reduced rates you need to worry about. And right, it's a non-standard rate or an exempt status. And like you need the piece of paper to let you know that they're buying grain to use in agriculture so that it's exempt. Now, the challenge usually isn't getting the piece of paper. It's tracking and maintaining that piece of paper so you can reproduce it in an audit, right? So we don't care about the piece of paper unless an auditor asks for it. That's the reality. And most companies at some point are getting it audited. And so you always want to keep track of that piece of paper. Avalara has solutions for this. We actually will track and store those pieces of paper for you in the system. I'm going to skip this particular slide and go to polling question number 3, where we're going to talk about what would make sales tax compliance easier in your current role. And we've got the polling question up. Better integration with QuickBooks, fewer manual steps for exemption management, clearer view of tax obligations across jurisdictions, automated return prep and filing, the all-inclusive all of the above, or the ominous other. I think we can close the polls. What do we got? We got all of the above, yeah. If you're dealing with taxes, it generally hits most of those categories that we're talking about. And last but not least, I just went through the entire process of, should I register? I have registered. I've calculated taxes. Do I need to keep any of this specific documentation related to not charging taxes and still report the sale? Number 5, remitting, right? Filing the almighty tax return. Again, going to be a little quick on this. making sure the right tax amount gets on the right line of the tax return has very little value. I know a lot of processes out there will automate the calculation piece within QuickBooks or within Shopify, for example, but they won't automate the end part, the filing to the state, which is the riskiest part, right? That's the part where you get that $5 in tax to the agency. And like, you have to remember the login credentials. You got to make sure you're paying it correctly within the right time frame, all that stuff. Outsource it. Most companies outsource it. It's one of our largest outsourcing operations we have here at Avalara. We file and pay returns. We file several 100,000 returns a month for different states. It's a industrial sized process we have here, and we do it right. That's what you can use us for. Real quick summary here. We were just talking again, the 5 steps. We just finished up on the remit process. And now I'm gonna try to get to the next slide, which apparently I'm challenged with right at the moment. Like I'm really challenged, like we're gonna, oh, there we go.
It's always
And
fun.
we're just, yeah, go ahead.
Oh, no, it's always fun when you're doing a live webinar and things don't want to work. So just reminding everybody, we have the partner referral incentive. You can earn, as Murph said, you can earn $1,000 by the end of September just by taking a casual look at your customer base and calling me and saying, you know, hey, I just want to confidentially talk about these. We do this all day long. John, Roger, and I, and Murph, we've all been doing this for over a decade. Your customers are extremely important to us. We understand that value of that relationship. And so everything we talk about is 100% confidential, just so you know. My name is right there, jamie.dunn@avalara.com. And again, I want to remind everybody, especially those of you who've been with Avalara for a long time, we have 6,000 employees. You have a dedicated team of QuickBooks experts and partner managers here at Avalara, and you're looking at them. So please don't call our 1-800 number and don't go to an online chat. Protect your client by calling me, John, or Roger directly. We do not want anybody to get the runaround based on, you know, not having enough information. So we are your QuickBooks team. We got 3 minutes left. Okay, John, take us home because we got something really cool we're going to offer.
Yeah, no worries. First, we're going to do polling question number 3. Would you like to learn more about how Avalara supports QuickBooks users? And you can hit there, yes or no.
And there's a cooler down there.
Yeah.
Yes.
If you put
And-
no, you're not going to be in the raffle for the cooler.
Oh, I love that.
I love
But
it.
if you say yes,
Yeah.
say yes. I actually have one of those coolers. Not that exact one. It's not orange. Don't hold it against me.
I
They
have that
stopped.
exactly.
I was
They
going to
stopped.
say, this is Avalara orange for sure.
They stopped making the orange. I will tell you. There's a Yeti store down here in Portland, Oregon, where I live, and they stopped making the orange color. I was depressed. I guess we can go ahead and close the poll.
All right.
Awesome.
Must have been a lot of people who answered that before they knew about the cooler.
Yeah.
Yeah. We will get back to you in a day or so on the raffle item.
Awesome. And then we got some contact information here.
So I'm going to take host preference here and mention the fact that, you know, a lot of people are doing business not between state and state, but now between country and country. And more and more countries are saying, you know, we want to make sure that we get our tax.
Yeah.
So
Yeah. That is
I know that's one of the things y'all have been working on.
yeah, so we actually do with a lot of our accounting systems, we have integrations that handle what we call VAT, gross receipts tax, as well as what we call cross-border taxation, which is excise and duties. It's one of the things that a lot of companies work with, a lot on our e-commerce systems, but it's definitely something we do as part of anything we do in the US from a calculation and filing point of view, we have equivalent services on the foreign country side of things, I guess, depending on the country you're doing business in. Awesome. Well, I'm just going to go ahead and stop sharing then.
Well,
I'll
I
turn-
want to thank you all for being here today, and I want to thank everybody that attended. And folks, we have your name, so if you requested more information, you'll hear from Avalara.
Thanks,
And with
Murph.
that, we'll say goodbye and see you
Thank you.
next month at QB Talks. Bye-bye.
Happy
Ciao.
taxing. Bye.
Woohoo.
Thank you, everyone.
Are you an accounting or tax professional who wants to stay ahead without spending a dime? Join thousands who trust insightful accountant and tax practice news to keep them informed and empowered. Get expert updates on QuickBooks, Xero, tax planning strategies, and workflow tips delivered straight to your inbox. Whether you're a solo bookkeeper, firm leader, or tax advisor, these newsletters are your shortcut to what's next in the profession. They're free, practical, and built for people like you. Visit insightfulaccountant.com and hit subscribe to start your smarter workflow today for free.